Hi, everybody. This is Prince Dykes here, the Royal Financial Investment Group. Coming to you today, we're going to be discussing the topic of how to invest with little to no income. And we're also going to just answer the questions that I was asked. I was asked a question, so remember this is a place that you can email me at Prince, Prince, at Royal, Royal, Financials, financials.com, Prince at royalfinancials.com, or you can hit me up on YouTube, inbox me on YouTube, or inbox me on Facebook. The Facebook page is facebook.com/Royal Financial Group, or you can hit me up here at the YouTube channel, comment or anything like that to get your topic spoken about. So I'm going to address the topic that I was asked first. So the first topic that I was asked was how do I feel about the minimum wage raise in Washington? If you haven't heard, the state of Washington is talking about raising the minimum wage to 15%. Not 15%, $15. They're talking about raising the minimum wage to $15 per hour, which is pretty high and, pretty good for the workers. So let's look at it here in the grand scheme of things, what you're looking at. So we live in a capitalist society, and we all know in a capitalist society, you have a triangle. It's built in a pyramid. You have the high class, the middle class, and the low class. So in order for somebody to be rich, there has to be somebody poor. In order for $1 million to have any value, somebody must have no dollars, a little to no dollars. Because if everybody had $1 million, then $1 million wouldn't be worth anything, right? So the middle class, the high class, the higher class, middle class, and low class, what separates everybody is this simple thing. If you think about it, if you don't know what part of class you're in or what am I talking about, it's a pretty simple definition. I like to break it down to where everybody can understand it. It's like we're just having a conversation, right? So you have your low class, your lower classes, which is pretty much your workers. They're usually your waiters or people who work at car washes or their jobs. People working maybe retail, maybe a cashier, something like that. They're just jobs. There's something you just go in, you supply labor, they give you money for it. That's it. It's not too many benefits and retirements and medical and plans and stuff like that involved. It's just a job essentially, right? Then that's your lower class. Your middle class are your people who are career oriented. They have some type of career. They have a profession per se. They are a teacher, your doctors, your lawyers, your not your business owner, but your some small business owners, your teachers, your doctors, your lawyers, people with professions. Things that people say, your firefighters, EMT, medics, something like that. It's a career. Military. Those are your middle class that has a career behind it, right? They have some type of way where they can move up, things like that. That's usually your middle class, where your middle class fall into. So, and then you have your higher class. Your higher class people are pretty much your business owners. Your business owners are pretty much big investors. That's pretty much it. If you think about anybody that's in the higher class, I guarantee you they own or they're deeply invested into some type of real estate business or something like that. They're invested into something or they're business or they own something. Point blank. If you look at it, you can find me not one person that's in the higher class that somebody doesn't own anything. And if they did, or if they are in the higher class and they don't own anything, they're there because somebody else owned it, right? Their grandmother owned it, their grandfather or somebody else owned it, or somebody started something that their name is attached to, that ownership is entitled to, right? So that's pretty much a pyramid in life, right? So essentially, in a capitalist society, like I said earlier, in order for somebody to be rich, there has to be somebody poor. So if you have a rich person, if you raise minimum wage to $15 or whatever, what I see, this is my opinion only, what I see, it's a Jedi mind trick for the higher class. Now, what do you mean by it's a Jedi mind trick, or what's the whole premises behind it? Because the idea is to keep the money in the poorest people's hands, because it is a known fact that the lower class, the poorest people, are the ones who spend the most money, right? We all can agree on that. The poorest people are the ones who spend the most money in this country. because the lower class has a mentality of, hey, I'm just surviving. I don't have money to save or invest, anything like that. I can pay rent and this and that. I have a little bit of money left over, and I can just go buy what I want, which is nothing wrong with that. There's nothing wrong with it. But these are your biggest consumers at the lower class, right? Like I wrote an article earlier, not an article, but a little paragraph, a status on Facebook page, and it said that it essentially was saying that when wealthy people have money, they splurge on assets. You know how every time you see in the news, this man is buying this company, or he's buying this much land, or he's buying this business, or he's doing something. They splurge on assets, but they are very stingy when it comes down to goods. You don't see these people wearing, they don't spend too much. They're very stingy when it comes down to clothes, cars, and not goods like clothes and cars and jewelry and things like that. They're not too elaborate on those things. They spend their money on assets. Versus your lower class people, they're going to splurge on goods. They're going to buy all the jewelry, electronics, everything to make them feel better. But they're going to be very stingy when it comes down to investing or buying any assets, because the first thing they're going to say is, hey, I can't afford it. I can't do it. Right? Which is nothing wrong with where people spend their money. Life is not that long, right? So at the age of 30, it's a strong possibility you don't live about 50% of your life. So enjoy your life and, enjoy the fruits of your labor. That's why we work hard, right? But that's essentially what it is. You keep the money into the hands of the poor people. The poor people, they take the money. Is not going to they're not just going to sit there and just like, oh, I'm just going to invest it and do it. They're going to spend it. So it's essentially you're going to give them a loan. Hey, if I pay this person $15 an hour, they're going to come back and bring it back to me. That's what I essentially look at it as. But if you're a small business owner, let's say if I own a car wash and the minimum wage is $8 in my state, and I have 4 workers, right? I'm paying 4 workers $8 an hour for my car wash. So all of a sudden, minimum wage jumps up to $15. So it's like, wow, I got to pay $15. Now, if the only benefit of that is that they raise the minimum wage to $15, you better hope other people who are getting $15 an hour, you better hope that they're going to say, oh, I'm start getting my car washed a little bit more. Because if you don't have an influx of customers, but you have an increase in your payroll, there's going to be a problem there. It's going to be cutting into profits of the company. Because it's just simple math, right? If you own a car wash, you make your money off of essentially washing cars. So if you're washing the same amount of cars, and let's say your company is generating $100,000 a year, and now you have an extra expense, your expense on payroll tax has just increased, that is going to cut into your profits essentially. So, if you're a small business owner, it could be bad business. I could have 4 employees that I'm paying $8 an hour. Now I have to pay 4 employees $15 an hour. I probably will duck down to just paying 2 employees $15 an hour, which meaning those 2 employees who are getting $15 an hour, they're going to have to do the work of 2 people essentially, which is great for those 2 workers. But you got to think about the 2 people who just lost their job, right? If you do this across a grand scale, if you do this across a grand scale, how many people that may possibly lose their job because of an influx of a raise if you're a small business owner. I mean, every small business owner is probably going to have to make that tough decision, right? Unless you get an influx in customers. Hopefully, if you're in a goods market and you see the lower class is making more money now, you may be happy when they turn around and say, hey, we're going to give these people more money, because that means people are going to bring more money to you, to your business, to your establishment, which can increase profit. But I think that it's just a common thing with inflation. The more money you put out there to circulate, it loses value. So I'm working every day. I have a nice career, and I'm making $12 an hour. So now minimum wage just jumped up to 15. The person who was making 12 now is going to want $20 an hour, right? And if you're a business owner, it's going to create a bigger expense for you. It's going to cut into your profits some type of way. So I can see that being, why you have a lot of the right side, the Republicans, are not big fans of it, because that's what most of your business owners are. And they see that, hey, we're going to get an increase and we're going to have to pay people more, and we're not getting more business. And usually on the left side, your Democrats, they're the ones that are usually for the lower class, and they're saying like, hey, this would be a great idea. You guys are making all this money. You guys are making record profits. It's time for you to share with your employees. Let's just raise it, right? And anybody would be happy they get a $5-6 raise, right? But if you look across the grand scheme of things, that's what happens. In order to keep the job is to keep, money has to have some type of value to it, So if you was paying, if you gave everybody in the world $1 million, $1 million wouldn't be worth nothing. A loaf of bread would be $5,000, right? That's what happened post World War II in Germany, when they lost control of the currency, and the currency just went crazy because the government had too much out there, right? So that's my I really, I don't really have it's the way, pretty much is your opinion of how you look on it. That's my opinion on it, of how you look at it on the grand scheme of things, of how raising the minimum wage can really affect people. So let's go into the topic. The topic is, how can you make money from having little to no money? Essentially, how can you invest with little to no income? So when you look at a lot of companies, for example, people look at Wall Street, and it's billions of dollars that's been passed around on Wall Street daily. It's a circle of people who trade things back and forth. In order for me to make money, somebody else must lose money. And when I lose money, somebody else made it. That's how traders work. But Wall Street's been going on since 1840, back when slavery was still in existence in America. So Wall Street's been around a very long time. You look at a company like CVS, they've been around since 1920. Coach, been around since 1920. During the Great Depression era, that's when these companies have been around for a long, long time. So what happens is, when people have no money or little to no money, they seem to look at investing as an expense. They look at it as well, after I pay my bills every month, I have this much money left over, and this person's talking about investing. They look at it as an expense. So we don't look at it as an asset. We look at, hey, when you have short-term vision, you look at investing as an expense. If I have $200, I say, hey, if I walk into Foot Locker, I can get the newest, hottest sneakers that are out, and I have them in my hand immediately, and I put them on my feet. So I hold a value to it because I can see it right now. You follow me? So you hold a value to it. But if somebody tell you, hey, invest into this and you will get your money, or possibly get your money in the future, people look at that as too risky. But if you look at the two things, if one person buy a pair of shoes that are going to depreciate in value versus somebody else who's going to buy a pair of I don't know, let's say land or something like that can appreciate in value over long term, then that's the difference. Over time, the shoe's going to lose value versus the asset's going to gain value. So a lot of people don't have long-term vision. So it's a lot of things that you can do. First, you can go out and find investors. Let's say you start a company. Hey, I want to build a car wash. I have a vision. I want to build a car wash, or whatever your business is. I'm just using a car wash just for the basic of the conversation. So you build this car wash, and you can go out and find investors. People who have money. You're like, hey, this car wash right now is worth $5,000, and if you give me $1,000 or whatever, I give you 25% of the company, which means you're entitled to 25% of the profits if there are any profits, right? You can go out and find investors is one thing. You say, hey, well, I don't know anybody with money. I don't know any investors, anything like that, or nobody's interested in investing in my idea. The next thing you can do is, if you have good credit, you can take out a business loan, right? You can go and secure a business loan. Let's say if the bank doesn't want to give you a business loan. They don't believe in your idea. You're not set up properly or whatever. They don't have a business loan. Then you can say, hey, well, I can go and start, maybe I can take out a personal loan. I can just go to the bank, take out a personal loan, and go and start my business. Or if you can't get into the part, if you can't start a personal loan, now you got to look at, okay, what do I have? I work at this job, or I have this income, and I want to create my own situation. So what I'm going to do is, I'm going to get rid of cable. I'm going to cut back on my cell phone. I'm going to cut back on my internet. Or maybe I can find ways to lower my insurance, and that can open up $300 for me a month. So with this $300, what I'm going to do is I'm going to set it to the side, and I'm going to build my business with it. So if you do have some type of income, you can make cutbacks, because I seriously doubt if there's nobody out there with zero amount of income. If you have zero income, then you probably need to get a job. If you do have a job, you have an income. It's just, what are you doing with your income? Are you taking your income and you putting it all on consumables? Are you just buying the latest shoes, the latest clothes, the latest fashion? Or you just went out here and just was unresponsible with your money and just went out here and bought all these cars and created all these expenses to where you can't invest? Then that's the problem that you created and that you're going to have to get yourself out of. Maybe you're going to have to duck down on some of the cars. If you're renting a 5-bedroom place, maybe you can break it down to a 4 or maybe a 3. Make sacrifices to open up money within your budget to follow your dream or your vision. So that's always the number one question, not number one question, but the number one situation a lot of people have. They'd be like, wow, I never thought about investing, or man, I want to invest, but man, I don't have the money. How can I get the money? So I just gave you some examples right there if you had little to no money. And you can't look at the reason why I brought up how long companies been around earlier, like CVS, Wall Street and stuff like that. You can't look at them and say, man, they have so much money. These people have been around for hundreds of years. So immediately you're not going to be able to compete right off. But if you look at any franchise, anything, any company over a long period of time, you're going to be able to notice that somewhere down the line, somebody or somebody invested. Sam Walton, Walmart. Somewhere down the line in the 50s or the 60s, he decided to take out a loan and open up a corner store, which now today we know as Walmart. Microsoft. If you look back on the history of Microsoft, you're going to see Bill Gates one day decided to take out a loan and to build a prototype of a computer. So somewhere down the line, somebody has to click in their head, or it clicked in somebody's head somewhere down the line to like, hey, I'm going to start something. Look at the oil companies. J.D. Rockefeller, guy back in the 18th century, he was the one that, hey, I'm going to do this now, right? So a lot of people are like, I can't do it, whatever, blah, blah, I have to have, it takes money to make money. I don't have that much money, blah, blah. It was somebody in the family or somewhere down the line that said, hey, I want to make this happen, and they made it happen. And that's why a lot of companies are to where they are now. They have a head start. They've been doing it for hundreds of years. So don't think that, hey, I need a multi-billion-dollar budget in order to start, right? So crawl before you walk. Hope you guys learned something from this topic. Thank you for listening. Until the next time, take risks, but make sure they're smart risks. Thank you.